From SBI's Executive Briefing Center in Dallas, Texas, the most watched and listened to content in B2B sales and marketing, it's the SBI Podcast with your host, Matt Shares.
Hey everybody, welcome to a special episode of SBI TV. I'm Matt Shares, I'm the CEO of SBI, and I'm here for another episode of our Revenue Growth Help Desk. And I'm really pleased to feature Mike Hoffman as my special guest. Not only has Mike been a friend for a long time, we've been leading SBI together for the last couple of years. And after Mike spent a decade in private equity and a couple of decades operating businesses, I was taking a look at some of the questions that we've been getting, and just with the rise in deal volume in and around private equity as we navigate our way out of a pandemic. And there's been such intensity, I thought Mike would be a great guest just to help answer some of the key questions. So, Hoff, good to see you, man.
All right, good to see you. Wish I could be there in person, but you know there are restrictions. I'd have to quarantine for 14 days when I came back. So.
I know we can't have you locked out of New York in your own CrossFit gym. So I'm glad we've got you here. So I'll take you on the monitor.
All right, great.
So, Hoff, I guess where I want to start. I mean, you've seen things from both sides. You've been inside sales organizations running them. You sold. You were in private equity for a decade, right? Now you've been in strategy consulting for the last few years. As you just sort of think about the demand that's happening right now and some of the challenges around a private equity firm looking at a potential asset, maybe just share a little bit of what you're seeing from both our work, but just your view of the macro environment.
Yeah, it was interesting because I think for a while there was a pause and none of us knew what to expect or what was on the horizon. And then over the last couple of months, there's been a marked uptick in deal flow.
Yeah.
And the feedback that I've gotten, it's interesting. So one has been that the lending markets have opened up again. So they've kind of figured out how to value companies in this. And the other is the upcoming election. And it's interesting because there's always a level of uncertainty that comes before that. So what we're hearing from all our private equity clients is we have deal teams that have no capacity left. They're turning away deals that they like. And the interesting dynamic around it is you hear rumors right now of capital gain taxes doubling depending on the party that wins the election. And that's kind of funny coming from a government who just lent trillions of dollars, but nonetheless, that is driving sellers to want to sell their companies ahead of the election.
Yeah. So then, Mike, if you think about where we spend our time and many of the questions that we get asked is around, hey, help me as a deal partner get some certainty around this potential asset, around go-to-market. We've been doing a lot of that for the last 14 years in normal times. Now there's even more scrutiny, but a different way that folks and different levels of intensity and pace and questions that we're getting asked to answer. So maybe just talk a little bit about that in the macro and perhaps help our viewers, both those that are running private equity owned businesses, maybe getting ready to go through a process, or the private equity operating teams.
Yeah, I think more and more what we have seen, and this was both on the inside of private equity and now I think this has accelerated over the last couple of years that you and I have been together, is that more and more companies have to underwrite to a growth thesis in order to be successful. Some of the traditional levers, they're not going to get them there as far as the returns, the money on money returns and the internal rate of return that they need. So they're kind of looking at this. So now they're looking at it across 4 quadrants of growth theses, and they're all learning together because most firms have not underwritten historically to a growth thesis, and those really fall into 4 categories of growth theses. Number 1 is how do we create sales and marketing operating leverage, meaning we think historically and benchmarked and looks like sales spend is about right, but we feel like there should be more of an outpaced growth versus the spend increase. And so how do we get that? So it's a matter of productivity. Quadrant 2 invest in sales and marketing. So there may be assets that you're looking at where they knew they were going to sell and the way they kind of knew they were going to trade on EBITDA and to maximize valuation. What do? You strap sales and marketing. And so when you get that asset, you could look at it and they say, hey, it looks like the market's growing faster than this company. We see a lot of space. What can we do to invest in sales and marketing, and where are we going to get the best return on that? There's a third one, which is interesting, and most of this is for recurring revenue, SaaS companies and content companies, is Quadrant 3, which is a bit of P&L engineering. And how do we take people who've got a hangover from the old perpetual and service model, take services, move that down into a customer success organization, which a lot of the companies may not have had historically. Now it becomes sales and marketing cost. And your gross margins just went up. And as long as you manage the pricing associated with that to make sure that services rolls into your ARR, the trajectory of the business is great. Now you have to execute that like upon deal closure. You have to have that in mind and do that. And the last one is the interesting one, which is maintain growth with less sales and marketing spend. And the reason it's interesting is this: you could look at that and say that's for old economy companies. It kind of like the growth rate. How do we pull sales and marketing cost out and maintain that? But more and more, we're actually seeing that in high velocity SaaS companies where they go, hey, I really like the 40% growth rate. I don't like the fact that we're spending 65% of revenue on sales and marketing. I don't like the unit economics of 225% of first year ARR as our CAC. And so they're looking at how do we maintain that growth trajectory with less sales and marketing spend. So those are really the four.
Very helpful. So then, Mike, if you think about those four quadrants, and different sectors have different growth profiles, and that's a big part of what we do with the vertical teams that you send out. That whole question that you and I learned many years ago of what do I need to believe to be true, right? And in this environment, knowing that commercial organizations have gone through disruption, virtual selling, digital evolution, marketing playing a bigger role, some of these things. Anything you can share with the team or with the viewers and listeners around how to think about that question?
Yeah, I think the private equity firms, founders, owners, CEOs, I think they can get their heads wrapped around that first piece, which is what is the growth thesis that we want to go through. The key then is understanding what are the operational aspects that thesis has the most sensitivity to, and look at those things and how do we identify that, right? So how much impact do our routes to market have on a quadrant for, maintain growth with less sales and marketing spend? What does the coverage model look like associated with that? So what are the key operational aspects that we should look at, and we should do diligence if we happen to be a buyer that are gonna drive that thesis the most?
So Mike, if we flip to the other side, right, there's lots of deal activity for buyers, but there's a lot of folks that are potentially getting calls with really good assets looking at selling. And something that has, especially the last couple of years, is sort of that prep for exit, right? As you think about positioning, creating that narrative. Thoughts for those that are on the other side of the coin as sellers in this market?
Yeah, it's a good question. If you're a seller or you've ever been through that process before, everything that you've done is going to get scrutinized. Right? The PE firms, this is their business, right? They want to make sure that they discover what's necessary to discover in order to validate their thesis. So one of the key things that I would recommend, and that I think SBI overall we recommend, is look at the risks and then some of the mitigations associated with that. Because if you're going into an exit process, there are things from a revenue growth standpoint, a sales and marketing standpoint, you're just not going to have time to fix and someone's going to see it, but at least have the mitigation plans in place so that the potential buyer will understand those. The second thing is, we've both looked at lots of CIMs over time, and what's the future value? White space in Western Europe. In every one of them. So the other recommendation is have some really key areas where there's future opportunity, down to what's the level of difficulty to execute on it, what are the key pieces of the change, and what's the in-year impact, revenue impact that will come from making those changes, so that the buyer sees what the future opportunities are and that they can link that back to their thesis.
Mike, do you see people in some of the exit prep that we've been involved in, and obviously anonymized, but do you see sellers maybe not embracing the fact that their go-to-market model has been disrupted over the last 6 months, and maybe trying to be too perfect, as opposed to like, what are the investable components of the business pre-March 15th that are still in place? And then you've sort of got like a low, medium, high around uncertainty and path forward from that point, right? So it's like, yeah, some people are trying to steal a few businesses and whatnot. So any thoughts on that?
Yeah, with the exception of if you happen to be in commercial real estate, airlines, or hospitality right now, right there,
Yeah.
those come with their set of challenges where you can't really evaluate pre-COVID with what's going to happen now, because nobody really knows what's going to happen to those industries. But I think when you do a look back ahead of COVID, you can look at some of the key fundamentals. You can start to look at the key metrics around customer acquisition cost, LTV to CAC. You can look at benchmarks around revenue per quota bearing headcount. You can look I think looking at the fundamentals pre-COVID, you can make a determination on whether or not the trajectory was in the right direction. There's also probably there are some key things you can look at on how quickly were they able to adjust during that COVID. Did they make the changes that were necessary? Because that's a management team you probably want to bet on, the ones that were able to make those changes during a really difficult and unprecedented time.
Good point. All right, so Mike, last piece, and then I'll let you run. You talked about the 4 quadrants. You talked about the different ways to look at different businesses. As you think about like packaging up those insights, taking them into investment committee, and for the big unveiling of should we or shouldn't we, can you just talk a little bit about strategies to doing that, what you've seen, and what's working best right now?
Yeah, there was, and this is guidance, and I think some things I learned on the PE side and some good guidance from our private equity clients that are, they always, I think that the information exchange goes both ways.
Sure.
With the clients, we learn as much from them as I think they learn from us. 3 key slides that need to be part of it is, 1, those operational aspects that we talked about that drive the thesis, that the thesis has the most sensitivity to. What's the gap? What's the gulf? What's the evaluation of that particular operational area? And what's the potential positive impact? Number 2, what are the risks and mitigations? And that's a slide in itself. What are the risks and mitigations to the investment thesis? And then the third is, how do you execute on this during the first year? So all of those things, the execution components that will drive the thesis, what do you do, and at what time period do you do that? And then what's the financial impact, and what's the level of effort? Those 3 slides probably will show up in every single investment committee deck, and then the 20 or 30 or 50 slides that support that, that will go into the appendix. But those 3 slides, I would say, are the key pieces.
So Mike, my observation as I think back to the early days of commercial diligence when, 7-8 years ago, it wasn't that common, right? And the firms that were doing it then, at least from a growth perspective, we've seen some pretty outsized returns when growth has been central to the thesis. That last slide you spoke about, to me, like that 12-month plan that's not just high level around sell back to the install base, look at upgrading talent. It's like, really? Like, it seems like people are leaving the putt short. So I know I said last question, but you've always got a nugget to share. Getting that last slide to a level of like, I can get my head around that as a management team, and I can get my head around that. Like, it's not just investing in people. There's sometimes infrastructure investments that people underestimate to pull that off. So any last thoughts on that before I let you run?
No, I think it just needs to be as detailed as possible, and it needs to be supported by data. I mean, you have to be very specific. Like, here's the market size and the piece we're missing and a new route to market, and we should hire 10 salespeople, and here's what they will drive in pipeline, and here's what that will result in revenue based on historic information. Those need to be as specific as possible and actionable as possible. Otherwise, it's just, hey, let's put that in the upside case, and we'll talk about traditional levers, and hopefully we get to a 2.1x money on money return and live to fight another day.
Cool. All right. Always good to see you, brother. Appreciate you jumping on with us, and I'll see you soon.
Yeah, thanks for having me. I can't wait to see you in the studio live.
Likewise. So to our viewers and listeners, really appreciate Mike taking time. As we mentioned, this was one of the big inflows we've been getting recently. So Mike's taking you through the 4 quadrants, how to think about that, those 3 critical essentials that must be in the investment committee deck, and also the importance around the detail in that execution plan. Until next time, wish you good luck as you try and make your number.
This has been the SBI Podcast. For more information on the studio, SBI's Executive Briefing Center, our team, or to schedule a workshop, please visit salesbenchmarkindex.com.